Good day, you're watching Businessworld Live. I'm Danie, Laurel.
And I'm Jes Delos Santos. Here are today's top stories. Telco subscribers grumble as glitches mar the first day of mandatory SIM card registration.
Local airlines expect recovery momentum to continue in 2023. That's despite risks from external headwinds.
The International Monetary Fund is pushing for a thorough review on the tax treatment of passenger vehicles to take into account their environmental impact.
And PLDT holds talks with suppliers for discounts and cancellations of some projects to reduce its 48 billion peso budget overrun. Technical problems plagued the first day of SIM card registration.
Users mainly reported difficulties in accessing telco's registration portals, leading to a temporary shutdown of these sites. Gerard de la Peña with the details.
Glitches and complaints marred the first day of SIM registration. Among those who had hard time registering are returning Filipinos from abroad and tourists.
I'm gonna be here for 2 weeks lang, di ba? And then, i-registered mo pa. Ewan ko, parang sana okay na kung nakaload ka na. But, yeah, I guess, but that's the rule, right? So follow the rules.
I think they were trying to register it, but they couldn't get onto the internet website. It's more tedious than it was last time because I just got the SIM and then, was able to go straight away.
Robert, an OFW, tried registering 2 mobile phones to no avail.
Bali sa OTP, ang hirap po na dumating po sa bali, opo, even though na marami na pong na sinisend na request, wala pa ring OTP na dumadating.
News 5 tried to access Globe's SIM registration portal, but we got a prompt that said connection timed out and host error. The telco admitted that the site had to be taken down temporarily to have it optimized.
The daily volume of messages, data, the number of customers in our platform. So we can handle it, diba? It's just that, yun nga, we're trying to optimize the experience still.
Meanwhile, Smart said network congestion led to slow connection. For now, telcos asked subscribers to be patient as they increase the capacity of their system. They also reminded their subscribers that they may ask for assistance in their offices or stores. LGUs will also be tapped for registration in remote areas. Up to 160 million physical SIM cards and eSIMs are expected to be registered, prepaid and postpaid combined. The SIM registration will run until April 26 next year. For News 5, Gerard de la Peña, we are One News.
Following the reported server issues, Smart Communications says it has already increased the capacity of its registration portal to ensure that all subscribers will get to register their SIM cards. Speaking to the big story, PLDT Vice President and Head of Corporate Communications, Cathy Yang, says they consider birth pains of the SIM card registration as a, quote, happy problem, noting that these allowed them to refine the registration process. Yang also encouraged all prepaid subscribers to register their SIM cards ahead of next year's deadline to avoid deactivation.
Natutuwa kami at nagagalak. Mabuti nang naganap to because we've learned so much from just one day. Yeah. And ayun nga, we are refining the process to ensure na maging mas smooth pa.
Globe Telecom, meanwhile, apologized to mobile customers who experienced technical issues on the first day of SIM registration. In a statement, Globe said it has already taken proactive measures to fix their system. Globe added it has requested the NTC for a maximum of 72 hours from yesterday to observe their SIM registration portal to ensure that all patches made on the system are now technically stable. As for the DICT, the agency says telcos are mandated to set up registration centers in remote areas within the first 60 days of SIM card registration. Speaking to the chiefs, the ICT spokesperson Ana May Lamentillo said 65% of communities in the country still do not have access to the internet. And to solve the problem, Lamentillo said their government is already trusting the use of low-orbit satellites produced by a company led by business magnate Elon Musk. This is a new technology now being used in at least 40 countries.
This is new technology. This is technology that we have never seen in Philippines before. Kaya po we are confident doon po sa kanyang impact So this has been the strategy of this government. We're really making sure that we'll maximize ito pong mga bagong technology related to digital connectivity and e-governance.
In other news, local airlines expect recovery momentum to continue in 2023 as the industry is better positioned to weather potential external headwinds. The International Air Transport Association earlier said it expects a net profit of $4.7 billion for the global airline industry next year. This after the industry lost billions of dollars during the pandemic in 2020 and 2021. Philippine Airlines says it is already on track to restore its flights to 90% of pre-pandemic levels. Come 2023, PAL plans to restore its network to mainland China once it reopens to international travel. Cebu Pacific also expects next year to be better than 2022 in terms of passenger and cargo demand. With international travel picking up again, the company says it also expects a good year ahead if it adheres to its low-cost model. Meanwhile, AirAsia said it plans on establishing a more cost-efficient corporate structure as it aims for a full recovery from pandemic-related losses in 2023. Aside from reactivating some of its international routes, AirAsia also says it is eyeing new ones for next year. Is the hotel and leisure industry also seeing momentum in its recovery story just like the airlines, or will it be a challenging year ahead, what with worries of a global recession? Let's get insights from Benito Bengzon, Executive Director of the Philippine Hotel Owners Association of the Philippines. Sir Bong, good day, Merry Christmas and Happy New Year. Happy holidays.
Merry Christmas, Jester and Danie. Thank you for having me again in your program.
Okay, so first, kamustahin muna natin. How did the industry perform during the holiday season? Fully booked ba? Is it better compared to what you had last year? Is it revenge travel still a thing? Or are inflation worries at least tempering those expectations for the industry?
Hotel occupancies and revenues are definitely much better than last year. You have to remember that late last year there were still restrictions on travel. From the reports that we have received from our member hotels at the Philippine Hotel Owners Association, some of them are reporting as high as 90% occupancy over the holidays. And the month of December, by far, has been the best performing month for the hotels for 2022. So overall, it's been a very good year, and December has provided a very strong finish for our hotels.
Has there been a change when it comes to travel culture here, especially for Filipinos? Is Baguio still a thing during the holiday season or nagkakaroon na ba ng ibang options yung travelers natin?
The traditional strong destinations are still there: Baguio, Boracay, Cebu, Bohol, and Palawan. But we're also seeing a lot of changes in the preferences of Filipinos. A lot of them are adventurous. They want to try out new destinations. They want to try the local culture, the local cuisine. So we're seeing a more equitable distribution of domestic travel around the country. So this is good because it benefits our hotels, our resorts that are scattered all over the country.
Okay, sir, I'm curious which sectors are bouncing back the fastest? Which tiers? Is it still luxury travel, the revenge travel of the luxury market? Is it the middle market, families, corporate travelers? Give us a bit more nuance on these different types of tiers.
Domestically, we're seeing a lot of revenge travelers. Again, many of them have been cooped up in their homes, so many of them have been able to save a little bit, and they're spending it domestically and even for international travel. We're seeing a lot of movement coming from couples, from families. The MICE business, meetings, incentives, conventions, and exhibitions, is also starting to come back. We have a lot of corporations that are doing their meetings in and out of hotels. So this has provided very good revenue for our hotels. Internationally, The DOT reported just a few days ago that they have exceeded already their targets for inbound arrivals. We are now at 2.5 million foreign visitors. And we expect 2023 to even be better. Now, people are watching for developments in China because they recently announced that inbound travel to China will be eased by January. And hopefully, we will also see some movements coming from China, which was our second largest market before the pandemic, into the country.
Okay, sir, I'll get back to you on the China thing because that's a big issue. But you mentioned one thing, especially for our business viewers here, no? Conventions, meetings are back. Does this mean the trends before, which we all experienced during pandemic, of having virtual events, staying home, work from home, has this completely reversed and people are back into the hotel scene doing all the meetings face-to-face? Pareho na ba as pre-pandemic?
It has not reversed completely. What we're seeing is an optimal mix between virtual meetings and face-to-face meetings. What we've observed is that for preliminary or exploratory meetings, this can still be held virtually, but for the more important ones, both the partners would normally prefer to have face-to-face meetings. But we're also seeing the return of exhibitions, travel exhibitions, street exhibitions. So this has been a good development for our event management companies, our congress organizers, and hopefully the return of foreign inbound will provide additional revenue for this particular subsector of tourism.
Okay, now back to the China issue, sir. How much of an upside is there for 2023 coming from the China tourists? And will this be immediately or, is it going to be a gradual increase in tourists?
Well, first of all, let's look at where we're coming from. In 2019, before the pandemic struck the Philippines and, of course, all other destinations around the globe, China was our second largest market. Currently, if you look at the top 10 inbound markets for the Philippines, China is not even there. So the biggest market is US, second is Korea, and then Canada, Australia, UK. And this is driven largely by balikbayans or former Filipinos with foreign passports. Now, with this development in China, we're hoping that by the first quarter, we can see some movements into the country already. But of course, this will depend largely to the protocols that will be determined by our health authorities.
But other than that, of course, fears of global recession, this is one major headwind that the tourism sector as a whole is considering here. Is that in any way going to impede the bounce back story here for the hotel sector?
Recession, inflation, the cost of airfare will all be major factors we have to consider for inbound travel and even for domestic travel. Of course, we're hoping that we can contain the situation. For sure, it will affect the decisions to be made by the travelers, but we remain optimistic that the markets will return by 2023 despite the challenges that we're facing in terms of recession and inflation.
Okay, and finally, sir, we've been talking about recovery this entire year. Are there some growth stories you're seeing here, especially with new hotels being built? Is that happening? Investments, for example, from abroad into the tourism sector?
Well, let me tackle two things. First is when you talk about revenue, especially for food and beverage, the restaurants in the hotels, many of them are reporting that they've exceeded 2019 levels. Wow. So this is good news. Now, with to the development of hotels, this is something that we have to work on very closely. We just met with the Secretary of Tourism, and she has committed to support the hotel investment initiatives here in the Philippines by way of incentives. We have to take note that our neighbors are moving very fast. If you look at the investments in Vietnam, Thailand, Malaysia, they're moving very fast and we have to catch up.
What incentives specifically?
Yeah, how can we catch up?
Well, the incentives, basically the fiscal incentives in terms of income tax holidays, duty-free importation of capital equipment. But more importantly, we need to review the the so-called locational restrictions in terms of the investment. So we would prefer, of course, that the incentives be granted to hotel projects or tourism projects in general, regardless of their location.
All right.
All right, very interesting points there, and hoping, of course, for more investments for the hotel industry. Thank you so much, Benito Bengzon, Executive Director of the Philippine Hotel Owners Association. Happy New Year, sir.
Happy New Year. Thank you.
Now let's pause for a quick break, but coming right up after that. The International Monetary Fund is pushing for a revamp of the tax system on passenger vehicles.
More of that and other stories when Business World Live returns. Stay with us.
You're still watching Business World Live here on One News. I'm Jes Delos Santos.
And I'm Danie, Laurel.
At least 25 people have been reported dead due to heavy rainfall and flooding in Visayas and Mindanao caused by the shear line. As of 6 a.m. today, December 28, 3 of these reported deaths have been validated by the NDRRMC. 9 people were reported injured while at least 26 people remain missing. The NDRRMC also reports that the weather disturbance affected over 393,000 people across 10 regions. It cost almost 64 million pesos in agricultural damage and around 20.8 million pesos in damage to infrastructure. Misamis Occidental Governor Henry Waminal tells the chiefs that the intensity of the rainfall and flooding during the Christmas weekend was unusual and had never happened before. Waminal also admitted getting lost in the shear line jargon, prompting him to rely solely on the NDRRMC advisory.
Even the amount of rainfall, very unusual yung heavy rainfall that happened last December 25 and 26. So parang all of us Misamis noon had observed that that was the first time that kind of heavy rains that happened in the last 2 days.
The Agriculture Department confirms that onions have become even pricier in the past days. According to DA spokesman Rex Estoperez, prices of onions in markets now sell for as high as 520 pesos per kilo. That's nearly double the previous price of 280 pesos per kilo. The price spike comes after the agency thumbed down the importation of the produce to augment supply. The agency said it is now looking at possible interventions, including adjustments to the planting and harvest season for onions.
You have to change yung ating pong season, yung ating pong planting season, harvest season, para nang sa ganun, kung ma-address natin ito, yung ating production ay hindi masyadong maapektuhan. We have to address that also, no? Kung paano intervention ang gagawin ng Department of Agriculture dun sa production areas while protecting also our farmers, we have to protect also na balansin natin yung ating mga consumers.
The International Monetary Fund, or IMF, says the country should consider revamping the taxation of passenger vehicles to take into consideration their impact on the environment. The IMF said the Philippines should conduct a thorough review of the tax treatment of passenger vehicles. An IMF report said the Philippines should move away from luxury tax and move to an environment tax that ideally takes into account both carbon dioxide emissions and road congestion. It also added that low-value cars, most often old models, may be more damaging to the environment, infrastructure, and traffic safety than new vehicles. Still, the IMF notes that the Philippines should first conduct an assessment of the revenue impact of this policy change before implementation.
PLDT says it is now meeting with its suppliers in a bid to reduce the company's 48 billion peso budget overrun. The company says it is in talks with suppliers for discounts and the cancellation of certain components of delayed projects. PLDT adds that its discussion with suppliers also includes the possible replacement of certain projects that will be canceled. PLDT also says the ongoing discussion with certain vendors will help the company determine the appropriate treatment of the 48 billion peso budget overrun.
Right? Pwede na palang pang-exchange gift yung white onions. 520 per kilo.
How much is pork? I need to know. Comparable
Hirap
na
na
pala
mag-isa
siya.
today.
Okay.
Those are the biggest stories on the economic and corporate front today. I'm Jes Delos Santos.
And I'm Danie, Laurel. We are One News, all sides, all the time. But don't go away. We'll give you the latest on the local bourse when Businessworld Live returns. Stay with us.
And we're still watching Businessworld Live here on One News. Dan, it seems as though we're going to end the year talking about the telco stocks here. Day 2
Hindi
of
pa
the SIM
natatapos.
registration enforcement.
All right, well, let's take a quick peek at the telco stocks. We have a lot of things going on in the PLDT side, of course, apart from the SIM registration, which they said, of course, they're working on, and fixing that. You've also got Globe saying that they're back online, and of course, giving a deadline to the customers to register their SIMs. But we also have a disclosure from PLDT earlier in the day saying that they, the chairman, MVP, and the president and CEO Al Panlilio bought PLDT shares on the day of the record plunge. So that's very interesting. CEO Al Panlilio bought 3,000 shares on that day at 1,270 each, so lower than the 1,320 it's trading at, as well as MVP. And the Vice President, Luis Casas, also bought 170 shares for 1,250 pesos each. So right now, you can see PLDT recovering a touch, at least in the past 3 days. It's up by 5 6/10%. Globe, meanwhile, is up by 5 10%. And just a quick peek on how our bourse is doing. I'm just going to click on that. You can see that PLDT is the best performer at the moment, Jes.
But like what you mentioned, since we're already there, is there any chance that window dressing might actually buoy the bourse's performance before the year ends?
That's what some analysts are saying. So watch out for that. We are down to 2 trading days of 2022 that just went by. And like you mentioned, we are actually in the red this morning, despite the fact, of course, that the past week has seen the stocks in Asia having quite a resurgence there. China, for instance, has had a positive resurgence from the reopening decisions that they're going to be doing from January 8th. They've been on a 3-week high, at least for oil. It's been on a 3-week high, so a lot of demand there for oil from China. You've also got iron surging to the highest since August, copper and gold. So a lot of commodities here showing the strength of China's demand, having a story. But if you take a look, I'll just pull out the 1-month chart so you can see. So we've just been really trading sideways the past month. November was a really good month for us. We were up by 10%, but now we are still down by 7/10%. And let's see whether window dressing will save the day. I guess the hopes are just to remain at the 6,500 level for the end of 2022.
All right, 2 days left for the local bourse. That's it for today, December 28, 2022. Join us again tomorrow at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News live anytime, anywhere. I'm Jes Delos Santos.
And I'm Danie, Laurel. Stay safe, Philippines, for your One News, all sides, all the time.